Hi everyone, today we talk about free stocks to buy September 2020 edition. This is the most popular video series that I do on the channel where I talk about free stocks that I'm looking to buy in September 2020. And these three US companies, I will go through a few details of what I think of them. These three companies have been on the channel before, so they're not new companies to the channel. But yeah, I'll give a few reasons why I do really like these companies. Overall though, I'm going to start this month's episode off by saying that I'm actually more being conservative on the cash front. My main aim this month is to actually build up my cash pile. The reason why is I look at the market, very overvalued market right now, and normally when you get overvalued markets, eventually you run out of buyers, the market pulls back, and there we go again. So I'm kind of looking what's going on in the market now and thinking about better opportunities down the line. So I am going to say that I am more focused on cash building than actually buying stocks. So that's obviously my main focus. But as well as that, when you look at the stock market, you look at the S&P, look at the PE ratio of it, it's very high. 23 is normally the push on the S&P PE ratio. We're currently at like 29 right now. So very overextended. And 23 is in a very good economy. You look at the economy right now, not amazing. 10% unemployment rate. So it's definitely a very overvalued market compared to what's going on in the world right now. And I think that will eventually catch up with it. You look at a lot of the valuations in the companies. You look at Apple's, for example. I think like over the last few months, it's added like $1 trillion market cap value to the company. What's it done really to achieve that? Announce a stock split. You shouldn't be going up $1 trillion in market cap value because of a stock split. So that's just a prime example of what's going on in the market. And like I say, I'm actually probably looking at more of actually selling positions right now. But if I do sell any positions, guys, or buy any positions as well, if you want to know instantly when I am buying them and selling them, make sure you join my Patreons group where I'm always posting them sort of things. The link is in the description of this video, so go check that out, guys. But smash that like button, let's try get 200 likes and we'll get stuck into free stocks I'm buying September 2020 edition. So first up is a Chinese company. This Chinese company is called HUYA. Featured on the channel quite a bit. It is an amazing company. It's an amazing company. Like this is the most excited I've been about a Chinese company since JD, since Alibaba. I really like this company. Now these, obviously a few people get nervous around Chinese companies, so if you don't like them, obviously just skip to stock number 2. But HUYA is a Chinese company that basically works on streaming. It's like very much like you guys might know a platform called Twitch. And basically, obviously streamers go onto that platform. And basically it's the Chinese version of Twitch. And HUYA, like I say, has streamers. They make money through adverts. And basically, when you look at streaming platforms, what you think about streaming platforms, you think about growth, you think about the younger generation coming through. The younger generation are obviously bigger on these streaming platforms, YouTube. So yeah, HUYA, massive audience growth over the next few years. And also when you think about the cycle of consoles as well, you think about we're going to be looking at a new Xbox, a new PlayStation down the line. So obviously they're going to bring in a lot of people. HUYA have actually signed and you also think about like the esports growth as well, and they've also signed a new contract for a game called League of Legends, which is massive. So that's going to offer a lot of potential for HUYA. So obviously growth wise over the next 2 to 5 years, I see this one doing fantastic. When you look at the valuation's pretty good. It's trading at a forward P of around about the 22, 23 kind of range right now, which is pretty good. You look at the growth, it's actually profitable right now. As well as being profitable, the revenue side of it growing pretty well as well. The revenue is kind of going to be growing at about a 30% rate, which is fantastic. And you go on to look at the balance sheet of the company as well. I like having companies with clean balance sheets, and you get a clean balance sheet with HUYA. Also sitting on 10 billion, which is fantastic. So it's got a lot of cash to burn through, balance sheet in a healthy place, growth. And it's a very cheap valuation, so I am a big fan of this one. And it's probably my favourite stock right now on the stock market to be looking at buying. I'd like to get it hopefully under $24 to add into my positions. So if it is around that range, I will be adding into it. So number 2 is GameStop, and I've talked about this a lot on the channel previously. And basically, for you guys that don't really know, a lot of like online casinos, a lot of online gambling is actually illegal in the US and is only just been allowed to happen, which is kind of nuts to a lot of us guys in the UK. We think about online gambling as being around for so long, but it's one of those, it's just not been allowed in the US until recently, and a lot of states are still, you know, only just getting it through. So there's a massive growth opportunity here in Gang, and it's very different from your other players, you know, like William Hill, like DraftKings that are there. It's one of those that actually provide the service for them to go online, and what it does is then it takes commission for the amount of like bets and, you know, whatever games of blackjack go through it. It takes a little bit of commission from them sort of sales. So yeah, it allows a lot of these casinos and bookies to get online. So there's not much real big competition out there for it really. Now it had a bit of a drop in earnings. It dropped down to $20. The valuation on the company is a little bit steep. You know, you do look at the company and you think it's a market cap for about 591 million, and you look at the revenue and you look at the profit. You know, revenue to the profit side of it, you know, company making 38 million with a market cap of 500 million. You know, it is a bit of a premium for this one. But when you look at the growth side of it, you'll understand why. But yeah, like I said, it did have a drop after earnings, which is very, very attractive to buy into it. And I did buy after earnings, and potentially, depends what happens with the stock, you know, I might buy a little bit more. So I'll touch on earnings in just a second, but just from a company's point of view, it is a company that was making profit at the start of this year. And the growth on this company is going to be crazy. There's going to be some massive growth on it, and it's very close to profitability. Like I say, it was previously making profit. It depends how much COVID affects it, and you know, it needs kind of like sports betting to come back. It needs like the NFL season back, and then it'll, you know, should do okay. But when you look at the company on the balance sheet wise, 60 million in cash, no debt, so it's pretty healthy on the balance sheet wise. It actually increased that cash recently because of its IPO. Like I say, the earnings side of it, there was a drop in the share price because of earnings, but when you actually look into the company's earnings, they weren't actually that bad. Revenue grew 100%. You know, how many companies can you invest in where revenue is growing 100%? Absolutely insane growth on the revenue front. Profitability, I think Wall Street got this wrong. You know, it says that it missed EPS estimates, but they actually didn't take into consideration what would happen with the IPO costs. If you take the IPO cost out, Gang actually made profit in that earnings. So I think that was an error from Wall Street side of it. Because of the IPO, Gang actually also increased their cash reserves by six times, which is fantastic. And then when you actually look into like if you listen to the conference call, there was a little bit negative that they lost the sports betting side of FanDuel, which currently makes up about 10% of the revenue. But the company went on to say that it still has its casino side, which is fantastic. That's the bigger side for the income stream. It also goes on to say they're going to announce a new tier 1 client towards Thanksgiving, so that will hopefully push the revenue up quite a bit. It also gained a lot of customers as well, and it also said it's not changing its forecast on the revenue front even after losing FanDuel. And it also went on to say that basically Michigan's one of the next states that's going to be allowed to do a lot of these online gambling, and it's also not going to include that into its forecast figures, which should be that Michigan should be allowed towards the end of Q3. So you think about it, and they're basically on that conference call saying there's a lot of income streams here that aren't getting put in the outlook, and we're not changing the outlook. So it sounds to me there's a little bit of sandbagging going on in them numbers. So like the loss of FanDuel doesn't really matter that much because the company is going to make up the revenue somewhere else. And you know, if you went round every time saying, you know, you lost one client but you gain like 4 or 5, you know, you can't kind of, you know, hang up, you know, go, oh, like the company's not doing well. You know, every so often you know you might lose a client, but as long as you're making them clients up by 4 or 5 times what you're losing, it's totally fine. So I don't think that was a big negative. So overall, like, I was pretty happy with the earnings. And the last one is GWPH, and this is kind of back at attractive prices, you know, about $106 of making this video. And like I say, I think there's probably, you know, over 100% upside in this stock right now. And it's a pharmaceutical company, and historically, you know, I've never owned a pharmaceutical company. So it says a lot that I invested into this one, because I normally just stay away from them just because of the problems they have. Like, you see a lot of these pharmaceutical companies, they'll move like 30% because one of the drugs failed in phase 3 testing. And I don't really want that. So I've always stayed away from pharmaceutical companies because of that reason. But it's got to the point where I was like, I actually really like this one. So basically what they do is they make a drug called Epidiolex, which is basically used from like cannabis, and it helps a lot of patients that have a lot of epilepsy, and the results are really good, and it's in the US. It's just started launching in the EU and ramping up sales pre-COVID, and that will really help the revenue growth, really help the earnings growth. And also, it just got approval for another condition, which is also seizure related, which is called TSC, and it affects somewhere between 40,000 and 80,000 patients in the US and 2 million worldwide. So this has opened another market for this drug over the next few years. And when they start ramping this up, obviously that's going to see in the next year, 2 year, that's also going to ramp up the revenue and earnings front for GW Pharmaceuticals. So when we do take a look on the earnings and revenue front, it's a company that's just making profit. It looks like it's going to be profitable from now on. Revenue side of it, you can see the explosion on the revenue because of a lot of these drug approvals in Europe and the new one in the US. And like I say, it looks like revenue is going to be exploding like 40% every year, maybe even a little bit more than that. So revenue front, fantastic. Earnings front's fantastic. Some massive growth here. We look at the balance sheet as well. It's a company that has a fantastic balance sheet. There's only about 8 million in debt, but the cash is 477 million. Very healthy balance sheet, and like I say, when you look at the growth potential and how they're going to ramp a lot of these drugs up over the next 1 to 2 years, I think you'll see the appreciation in the share price for sure. So guys, those are the 3 stocks to buy September 2020 edition. I hope you enjoyed it, and if you made it all the way to the end, guys, make sure you smash that like button. If you're new around here, make sure you subscribe as well. We're getting very close to the 4K mark of subscribers, so if we can get there, that'll be absolutely amazing, and I'll see you in the next video.